Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Monday, May 17th for a Forex market analysis for you for the week of May 17th through the 21st. And before we get into it, we just want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube channel or Twitch channel, Forex Trading Unlocked, and also like our video. And also, if you would please leave some comments and questions, we will make sure to get back to you. If any markets that you wish us to go over that we did not cover, just leave a question on the comment section, and we will answer that and maybe even incorporate it in our next video. So with that, let's get to our live action screen here. We have the forex-trading-unlock.com website pulled up. From the Market Analysis and Education tab, we already pulled up the workstation page, which gives us the economic numbers, which we're going to skip past, and we're going to take a look and see what Dixie did. So the dollar index ended the week in a slump. It had a rather choppy week last week, really volatile. Today's trading is kind of quiet, actually, for a Monday morning. The key influences are the interest rate environment as well as gold and oil, which continue to dictate trends in the currencies. So just to show you real quick, also, besides how the dollar index looked like, look at the U.S. Treasury bonds, 30-year, on a weekly basis and on a daily basis, looking pretty negative. Now, it ended the week with a short-term buy signal, and it's kind of flat. So I think that after making a higher move high and a higher move low, we're in an indecision place just because of the fact that the Fed had been on a stance that they were not going to touch interest rates until 2023. But Janet Yellen's comment from the Treasury about raising interest rates did not help things and are looking to help suppress the Treasury bond prices, meaning interest rates going up. Crude oil, we have the futures chart pulled up here. You cannot show the live ticking, so it has to be in a delay because of regulatory reasons. It is currently trading slightly higher, just above $66 a barrel. We're looking for a breakout to the upside. This continued rally in crude is going to have an influence in markets such as the U.S. dollar yen, the U.S. dollar Canada, also the British pound U.S. dollar. We'll get into that as we get into those currencies. Now, also, we are going to look at Bitcoin also slightly today, but we're going to wait until the end of the webinar. So far, this is what you need to pay attention to. The markets that we're watching that are influencing all currencies right now is the bull trend in oil. We also have the bearish neutral trend in the 30-year Treasury bonds. And then, besides the dollar index, we're going to look at gold also, which influences the Swiss as well as the Japanese yen. This market is breaking out to the upside. This trend is very, very steep. As we make higher move highs after higher move lows, confirming the bull trend, we know that this will influence the U.S. dollar yen, most likely suppressing it to some degree. Then we also have the gold trade with the Swiss, which is also going to probably suppress the Swiss, meaning being bullish the U.S. dollar Swiss. So we'll get into those as we sway into these currencies. So first, let's look at the Euro US dollar, which is the biggest component of the dollar index. Right now, it is gyrating in a kind of neutral trade as we are coming off of higher move lows. You can see the trend is not that steep, but it's a grind higher over the past month of May. As you can see, we've had a lot of indecision, and although it is slightly higher on the month, it is not that extreme considering the volatility that we've had over the past 6 months, let alone the past year and a half. What we're looking for right now, if the bulls are to remain in control, is we need a breach of this $21.18 level right here. A rally above here confirms one new move highs and probably will have us challenging this past high from back in February at around $22.42. Should we get above there, that confirms dollar weakness, euro strength. Now, as far as this being something that can be maintained in the short run and the long run, as oil continues to rally and as gold continues to rally, I think the euro is going to have a tough time at maintaining this momentum to the upside. Another thing is still we have lockdown issues, and we're waiting on a lot of economic numbers for the EU. We know they're struggling, and as far as how well their economy is going to be bouncing out of this pandemic downturn, we'll see how things go over the next few months, but I think that's going to add a lot of pressure. So there's going to be a lot of resistance in this basically 121, $1.21 up to $1.23 area for the next month and a half. Now we are in the middle of May. We're in the middle of the second quarter, and we are heading into summertime months. Does that mean markets are going to slow down? No, but we do have a holiday market coming up in a week and a half in the U.S. We have a lot of central bank speak that we need to get through over the next month and a half for clarity, because we had not necessarily full transparency with the U.S. Fed, but at least it was on the table that interest rates would not be touched for at least another year and a half. Now that we have these whispers of interest rates being raised to curb inflation, which, by the way, is not the way you curb inflation. This is not my point of view. This is what anyone in finance will tell you. So it's kind of odd that they're trying to, while we have rampant runaway inflation and we have commodity rallies going on, which also is causing inflation, that the Federal Reserve would decide to ramp up the price of money while they're printing all kinds of money to begin with. Doesn't add up. So these are things that are going to definitely give us some volatility in the future. Right now, we are coming off this higher move low. For aggressive bears, I would say you can use this $1.2184 area. You have a low risk sell because right now the market's at 121.50. That gives you a 35 pip. I would have a stop just above it if you're an aggressive bear. Do not fight a rally above this area, though. If you are short and you're trying to fade this current rally, remember that is a counter trend trade. Keep your risk very tight and do not try and fight this rally. Momentum is still to the upside. We have no sell signal confirmation to give us any real reason to be short. But for you aggressive bears, it is a low risk play as far as if the timing is correct. As far as for bulls, I think as long as you are above $1.2051, you are pretty secure. Any failure from here would confirm new move lows after a higher move high, which would not make this market necessarily bearish, but it would set it up for neutral. The thing is, it already is kind of in a neutral trend range setting mode right now, and this may be what happens over the course of the next few weeks as we head into this waiting on transparency from central banks. We might start to see the euro kind of snake around in this area, and then once we have a breakout, that will help us get a determination of where the market is moving to. So let's see, now let's go and take a look at some other price levels here. If you want to know as far as a sell-off objective where we could most likely have a chance at getting down to, let's take a look at the most recent wave. So if we just go to here, from this recent higher move low and lower move high, you can get down to this 50% level here. You gotta love the 50% rule. So the market already came down into that 50% area and then bounced, and now it's trying to make a higher move high. And if we come by here, let's just say that the bears are right. Let's say your low risk sell opportunity is correct. Let's see what this means. Okay, so if we just take this low here and this high here, we already came down to the 50% retracement, which is a good sign of strength, and came down to the 0.618. So if the trend is to be solid, this now becomes a very, very good pivot point because Fibonacci levels line up with it. The wave theory lines up for it with it. So any failure from $1.2051 this is where if you're waiting to find a valid sell signal, it will come most likely when we have a failure here. So granted, you can sell it higher right now, but I would be careful. This could be the neutral trap zone. So range traders right now will probably be selling it from here up into this area here, knowing that this is the breakout risk, and then buying back around this area, meaning that we'll have a snaking along potential future for the euro US dollar. So now this would mean also that things such as gold and oil stay relatively flat. The gold rally would start to come to an end. Remember, it is an explosive move to the upside right now in gold after it had been just kind of building a base, trying to figure out whether it was going to fall back on support or continue its rally. Remember, gold had been in a bear market for a while, so for it right now, it may just be a corrective move. So we have to see how these pan out. But right now, we are still very neutral to Euro US dollar unless we get a breakout once again to the upside of $1.2184 or a failure from $1.2051. So now let's move on to the British pound US dollar. British pound US dollar, we have oil that is not quite $1 higher today. We have gold that is higher today. So these are all strong things for the British pound US dollar. So the euro and the pound, just because right now they are kind of in a similar track as far as trending against the dollar, there's divergence here. So as the pound US dollar, for instance, if oil continues to rally and if oil breaks out above $67, $68, you have a really, really good chance of this British pound US dollar not only breaching this $41.69 target, but then taking out also this previous high back in February. Now this is a big area. If we take out this first level here, one, it confirms higher move highs after higher move lows, locking, once again securing the upward trend. However, buying momentum is likely to grow here. It's very possible that you have a lot of stops in this area here, buy stops, meaning that for those that are short or trying to fade this trend, counter trend trades, I think most likely there is a big pocket of stops between this $41.69 all the way up to $42.45. Now you got to realize if this scenario is true and there are a bunch of buy stops here, besides the fact that you have buying momentum driving through this high to set up a new leg higher, if oil is one of the driving factors, you will probably see a big accelerated move. Like for instance, see how the market here rallied from $1.38 to $1.41 within 2 sessions. Be careful when the pound is a very wide-ranging currency. You don't necessarily need to have that deep of pockets to trade it, but you have to remember that when the pound starts to move, it can very easily have a $1, $2 move in a day, and it doesn't just happen all day. It happens like literally within hours. So be very cautious since the trend is to the upside as far as trying to fade this move. I would be very leery of it. It's a low-risk sell where it is right now if you want to use this $41.69 as your risk level, knowing that if it gets above here, you're probably going to see an accelerated rally. And it's also a counter-trend trade. What I would look for more right now is a fallback on support. A failure from $1.40 doesn't necessarily make this market bearish. It just gives it a digestive correction, kind of like what went here, before we see the next bounce probably off of this upward supporting trend line, helping to continue to maintain support in the pound US dollar. The pound, even though we have probably more economic woes in the UK than in the EU, because of the price of oil and gold and these other commodities, remember that the UK is a huge supplier of oil globally. So the fact that we are now a net importer in the United States, and also that BP and other companies from out of the UK are no longer wasting any money on trying to find new oil or buying up new rights to oil in the US, since they cannot because of the executive order placed in January. That means that oil, no matter what, has a new synthetic floor because the U.S. is now a net importer. This is big for the UK. As long as as the U.S. is no longer an exporter, the UK is definitely standing to benefit from this, not just on a jobs level, but on an economic level as well. So while the U.S. dollar potentially could become strong versus the euro and God knows what other currency crosses, be very mindful of the pound, that as long as this is riding the oil trend, it doesn't matter what happens geopolitically. For the most part, the British pound US dollar will remain a bullish market, most likely until, I would say, at least the end of this year. Obviously, there will be corrections, but we are making higher move highs and higher move lows. Remember, the trend overall for the last year and a half has been very strong. It's been sideways since January, trying to set a range here between where it was down here at $1.35 up to $1.42. And we had all this digestion over the past few months trying to beat this market up. That was when oil was starting to at least stabilize for a little bit. Now oil is looking like it wants to break out again, and we're following this move also. We're looking for that as well. Higher move highs, higher move lows, remember, is a bull trend. So if you're long this market, I would say $1.40 even here is a good place to have your risk level. If you're long from lower, definitely you don't want to be still long below here as it starts to get into this chop zone. Look for a better place to buy. And once again, also, if you are not in it already, if you want to try and buy in front of higher move highs, then definitely please use this $1.40 as your risk level. And unless there is a big sell-off in oil, which, I mean, anything can happen. If we have a correction, say in oil, where it falls below $60 a barrel, then you can see this British pound US dollar back around this 139 to 138 area probably very, very quickly. The likelihood of this happening, though, is very, very low. So let's look at the US dollar CHF and see what's going on here. If there's any questions, by the way, please leave them for us to answer here on our Twitch the chat room. And then also, I guess I forgot to pull up the YouTube chat room too, so I'll pull that up real quick to make sure, just in case we got any questions on YouTube. You can put this in the chat and we'll see. Okay, I have it pulled up. Okay, so you guys that are viewers that are watching, sorry about that, I didn't have that chat up, so now I do. So we have both the YouTube and the Twitch chat going. Okay, so no questions. So right here we are, the US dollar CHF. Slightly positive on the day. Once again, this market has been falling lower and lower and lower. However, as you can see here, we made this lower move low, we made a lower move high, and now we're trying to find some support here. Key thing here is that this was a buy signal right here. Actually, it was this day here. Well, both these days. So when we set this low on this day back on May 11th last week, this was a Harami buy signal. It's a high probable Japanese candlestick patterns. If you want to learn how to trade those, read the book High Probable Japanese Candlestick Patterns, like we talked about in the beginning of the video. It's available on Amazon. We will refer back to that later and give you information on how to get a hold of the Kindle or the paperback version. So the first buy signal was on the 11th. That is a Harami buy. The next day, because of this positive action here, that became a 3 inside up. A 3 inside up buy signal is a very, very strong trading pattern that, whether it's with the trend or a counter trend, which this currently is a counter trend signal, it has a very high probable chance of success. So now, as far as did we reach a target yet? Well, no, the target still is up around 92 cents here for the longer range target. The short range target we just fell short of hitting already. But that's the minimal target from a bounce like this, especially because it's a counter trend trade. But should this be a short-term low that holds for the next week or two, then it is unlikely that we will just digest between this 89 level and 90 cent area. It is very likely that we will see a bullish fueling of buying that will catapult this market above 90.97 and get us up back towards this 92 area. So just to give you an idea, as far as a full correction, let's say from, if the bull trend really comes back for the US dollar Swiss, what is the minimalist target that we can look at? Well, we use our 50% rule once again. So we have this 92.28 area. So this is our short-term, longer-term correction upside target objective. Now, if we go down to this past higher move low right here, well, then we've already hit our 50%. That was the high. We hit that on the second day of the signal. So the first short-term target, like I said, has been hit, but now we're seeing if this is going to hold or not. If we get this breach of 90.97, it is very likely that we will catapult all the way up to this 92.28 target. Now, does that mean that we're in a bull trend for the US dollar Swiss? Absolutely not. But with gold rallying and oil rallying and interest rates also going up in the US, that is adding strength to this buy signal here. And that's probably why we, instead of making new move lows like we did with other currencies against the dollar, now we're looking to hold this support and get a run towards the upside. So we'll see how that pans out over the next couple of days and see. Can you also take a look at Eurogbp? Absolutely. While we're still on the euros, that's a really good question because the Eurogbp is kind of in limbo here. Now, as far as strength, here's what I would watch. As you can see, we'll go back to the crude oil. You can see crude oil has been very choppy here. It made a higher move low last week and was higher on the day on Friday, and now is just above here at 66, like 04 or 66 even, hovering below this breakout here. So for the Eurogbp, that's why you see this bounce here. As oil starts to gain strength, okay, the Eurogbp is going to continue to make new move lows, okay, meaning that the euro is weak versus the pound. The reason I'm telling you this is that the pound versus many currencies is very strong. Like, for instance, let's look at the British pound JPY just to find where is the strength with the pound. See how the pound JPY is rallying like this and continues this major momentum? The same thing is with the Eurogbp. The Eurogbp is going down versus the pound for the same reason. The euro, just like the yen, come from countries that don't have one thing that they really need, and that is oil. You know, I know that there's the green new wave thumpers and saying we have to get rid of oil and we have to get off the carbon footprint, which we do need to reduce and control our pollution to the environment. However, the reality is that from oil, which we drill all over the world and now are importing the United States, the 90% of a barrel of oil doesn't go towards gas or any type of combustible fuel. It goes towards plastics, it goes towards roads. So we are going to see a lot of inflation in anything that uses plastics or blacktop or anything like that, which we know is going on. So this is weak for the euro. So that's why you see right now where this market has been chopping around neutral for a while, and you're probably wondering, is it going to break out to the upside and become a bull, or is it going to maintain the bear trend? Well, if you look at overall, it continues to make lower move lows and lower move highs. Obviously, since April, it's had a bounce. This is a corrective bounce, because if you look at here, when we set this low here and then we came up to these highs, we buffered here. Since we established these highs, we've made a higher move low, lower move high, lower move low. So short term, the Eurogbp is a bear. So I would say if you want a critical point to trade off of, if you are short, I would be very mindful of this 87 even area right here. Any trading above here, that would confirm strength for the euro pound. What would cause this? If we had a big sell-off in oil. A big sell-off in oil, meaning let's say oil gets down to $60 a barrel, then my friend, let's see, Spartybus, I think you can see at that point, wherever the Eurogbp is, especially if it's in this lower area, if oil starts to trend lower, we should see a pop in the Eurogbp. However, with oil floating below its highs right now and looking for a breakout, I think you're most likely going to see a test of support and take out this 85.59 low here and establish a lower move low. Obviously, anything can happen, but I would key off of those markets, especially, and as like I said, you can see like the same thing as for like the pound yen or the pound. Now you could say yen pound whatever, and it goes the other way as far as direction. But think about this: if you're going to use the British pound as a variable in any currency cross, whether it's the British pound US dollar or the British pound euro or the British pound Canada, take into account oil. Where will you see something where oil doesn't become such an impact? Well, that would probably be something like Canada oil, pound, or pound Canada, however you want to say it, or look at it. So these factors right now, as these trends are continuing to maintain their strength and momentum, they're driving the direction for these things. So yeah, great question, Sparty Bus. I'm glad you asked for a different currency cross, in which if you guys want any other currency crosses, we will take a look at them as well. So all right, now let's get back on track. We were at the US dollar Swiss. So once again, because of oil, we're looking for a breakout to the upside here, and also because of the interest rate moves, also we are looking for a breakout to the upside here as well for the US dollar Swiss. And that is pretty much it for the euro currencies. Now let's go, and since we started already looking at the yen, let's go to US dollar JPY. So look at this. Oil is slightly higher, and JPY, US dollar JPY is slightly lower, but this I think has more to do with the gold trade. As gold rallies, that is a little bit negative for Japanese yen, or US dollar yen. But so it's kind of, when you look at this, this is setting up another high probable Japanese candlestick pattern, which is a continuation pattern. So this is key right now. This high at 109.80, a rally above here really confirms strength for the US dollar yen. And should you see oil especially break out to the upside over the next couple days, we have oil numbers on Wednesday. If we rally into that number, it is very likely this US dollar yen is going to snap back to the upside in a big way. The trading range for today is very quiet. It has been today. It was on Friday and Thursday. Now remember, the dollar index took a beating on Friday. Look at this range in the yen. It didn't do very much at all. You should have seen the US dollar yen sell off. We should right now be testing this 108.31 area, which we are not testing this area. James, thank you, James. Really appreciate your questions. What we have here, if you notice, is bullish candlestick right here. This day we had this big momentum here, and then we had last Thursday, last Friday, and now today we have these small negative closes. If we stay about like in this range today, I mean, for the most part, I mean, all the foreign markets are closed. We're in the middle part of the U.S. trading day, heading into lunchtime. Things are very quiet. I'm not expecting any really major action to the upside or downside today. However, let's just say, for hypothetical reasons, in a perfect world, that we close around where we're at now or slightly lower and stay above this upward sloping trend line. Tomorrow, if we get a rally that comes up and ends up positive, absorbing these last 3 days, especially if it at least the majority of the range, then it is very likely that we're not only going to see a breach of 109.80 and a rally, but we're going to blast through 111. Especially if you see oil getting up to 67, 68 bucks a barrel, and with gold continuing to rally, then it is really, really likely that you will see the US dollar yen explode. And this would be a continuation pattern, that another high probable Japanese candlestick pattern that we don't want to get ahead of ourselves because it is forming. And tomorrow we will see after the close whether or not it is confirmed. So that is a big deal. Should we get, like I said, a pretty much close around where it is now or slightly lower, and then see a bullish reversal tomorrow, which is likely to take out the 109.80 level, and it has to settle up in this upper area around this resistance level or a higher. If it does that, that is a very big bullish continuation signal trading pattern, which would probably give us enough momentum, like I said, to take out this previous high from back at the end of March and send us screaming up towards the 111 up to 113 area in the longer term. So let's see, we have everybody. What effect do Dixie and US dollar Swiss have on each other? Okay, well, that's a really good question. So let's go back to the Dixie. So the dollar index is a broad-based indicator for all of the currencies versus the US dollar. Now, the different currencies have different weights. So, for instance, the euro and the pound are the bulk of the percentage of the dollar index. They are the two biggest currencies in the world next to the US dollar. The Swiss is also one of the major currencies as well, but is not as strong as the euro or the pound, meaning that let's say you have a big sell-off in the pound and there's not all the let's say all the currencies versus the dollar are flat on any given day. If the euro and the pound are up versus the dollar, that's going to make the US dollar index go down. If the other currencies are down versus the dollar, meaning the euro and the pound, and they're down big versus the dollar, that's when you see a day like this where the dollar index goes up. Now, you could have it where the pound and the euro are flat, not really doing anything on the day, and then it would mean that the dollar index would be lower when currencies like the Swiss and the Canada and stuff like that are stronger versus it, and then it would be higher when those currencies are lower versus the dollar. Now, we have a lot of divergence in the currency market, the Forex market right now. So to use the dollar index as a key as far as where currencies as a whole are going, it's a little muddled because we have this this commodity trend that's driving a lot of currencies. See, before, when we were in 2019 and 2020, the oil issue was off the table. So was the gold issue. So was the interest rate issue. Now, interest rates are a function of currency pricing. So when that is neutral and doesn't mean anything, then you look at the index and you can see that the broad base of currencies were on any given day maybe up or lower against the dollar, but over the longer term, they're typically trending one way, meaning that the dollar is either bullish and the dollar index is going higher, and the value of the dollar versus most currencies is going down, or up rather, and then conversely, if the US dollar index is going down, the value of the dollar versus most currencies is going down rather, and then the other currencies is going up. So as far as how the Swiss is concerned, it is one of the major ones. So if the dollar index is lower, that's usually positive for the Swiss. If the dollar index is higher, that is negative for the Swiss. So the key thing is, like today with the pound rallying and stuff like that, you still have pressure on the dollar index, but it's starting to wane. So we'll have to see how these net result over the week, but that's typically how you see them influence each other. So let's take a look at this. As you can see, the dollar index, and we'll show you how much of a weight it has on the Swiss. The dollar index topped out in March, on March 31st of this year, okay? And then this last higher move high here was on May 5th of this year. So we have the end of March and we have the beginning of May. Now let's go back to here, US dollar CHF. So what do we have here? The end of March, boom, we have this top right here. And then we have the beginning of May, we have this top right here. So here's your answer to this one. As far as the dollar index, within a few days of a turn in the index, it does seem to have an influence on the US dollar Swiss. Now remember, there's the other trending markets that are helping to influence the dollar. The higher price of oil and the fact that the U.S. is now an importer of oil, that hurts the dollar. See, when we were an exporter of oil up until January, this oil rally would be strong for the U.S. dollar. It would actually be helping us, especially against the pound. That's why the pound started to level off at the end of the year. And then since now oil is no longer, since we're importing it, it's giving it strength again since February. So the dollar index, as you can see, on a longer term basis, the trend helps you to confirm direction for the U.S. dollar Swiss as far as big turning points. But on any given day, you have to be careful with using that index as a guide for strength. So it's more about swing highs and swing lows, and that's why when I get signals in the dollar index, which here, let's go back to the dollar index real quick and show you how it relates to the Swiss. This actually here was a high probable Japanese candlestick pattern sell signal. So is this one here. They're one of the weaker ones, but they are, and this was a counter trend signal as well here. And then this one here, it was not a counter trend signal. It was coming back into the trend, okay? So when you have situations like that, like for instance here, when we have this gap here in the dollar index, took out this high and this low, these are major pivot points where we started to maintain this trend. Now let's go to the US dollar CHF. So this here was a minor high probable Japanese candlestick pattern here as well, and this one here as well. Now, did they line up to the date? No, this one here was off by a couple of days. So first we had a minor sell signal in the dollar index. The Swiss continued to rally, or the US dollar continued to rally, even though the dollar index was decreasing. So the ebb and flow of these two, they're not exact when it comes to a currency like the Swiss, because it doesn't have the weight like the euro or the pound. But if you use the euro or the pound, for instance, then it gets a lot tighter. So let's go back to dollar index. So dollar index, let's pick these dates again. So this is March 31st, and this is May 5th. Let's go to the euro US dollar. Euro US dollar. We have March 31st. Here's a bottom. This is also a high probable Japanese candlestick buy signal. And then we have May 5th. Here's another bottom. So when you have like the major currencies acting with the same point as those dollar index, then that helps to give support against showing support for the dollar or bearishness for the dollar for other currencies as well, especially if they kind of are in tune with each other. The euro and the Swiss may trend against each other, but sometimes they trend together versus other currencies like the dollar or what have you. So I think I answered that. And cool. Hopefully that adds a little clarity to you as far as how to use the index as a guide. And you'll see, if you've been watching our videos from the past, or you may keep on watching it, when we get signals in the dollar index, and that's why we started the webinar with it, it does give us a gauge of direction. Okay, so let's go back to the US dollar JPY. And once again, we are looking for a continuation signal to occur here. So that would mean that today we settle here, and then tomorrow we want a market that is something like that. Okay, so if we settle around here and then we come back up and we get, like, let's say a breach of this, take out this high and settle somewhere around this range right here, then most likely we will start to see a continuation of this rally that will then bring it to the, oops, that's the wrong one, wrong directional arrow. And then that would be our big buy signal once again, because that is what we call a continuation pattern. So that is this whole area right here. So it starts with this bar right there. That's the first bar. We have the 3 down bars, and then we have this bar potentially tomorrow, which is an up. And if that happens, that would help to maintain this upward sloping support line, because you can see how this is trending higher. And this is almost a 45-degree slope, which is actually a very good slope for any trending market whatsoever. Okay, whether it's down or up, that's a good baseline to for a trend to bobble around and maintain its degree of going upwards or downwards. It's a healthy slope. If you see like moves when they get very vertical like here, that's where you can see where you get patterns of digestion, or you come back. The markets go out like they come in. So and that's another thing too, is when you see how radical this was, here's the basing, here's the radical, it slopes, then we have basing, and now here we're getting a period where you have a chance to once again go up or down. So now everyone's bearish to dollar, this is actually bullish to dollar. So the dollar index could be going lower, but this currency, because of oil and because of the long-term trend, it goes the other way. Now the yen is a big weight in the US dollar index. Doesn't mean the dollar index is going to help you give a gauge for the US dollar yen currently. All right, now let's look at the Australian dollar, US dollar. For this market here, we have a big sideways trade happening. It's slightly a bullish market overall. Over the past year and a half, it's been a big bull. But as you can see, from 2021 through now, it's really been in a big sideways. Since the beginning of April, it's trending higher, weak bullish trend. So we're looking for the indecision to somehow give us some clarity on, for some reason, no matter what. There's the biggest problem here is that we have oil and gold that are going up, which is positive for the Australian dollar, US dollar, but issues with China, and demand there, which was very strong, is tapering, and that also causes us to have a little bit of a digestion and inconsistency as far as technicals and fundamentals to give us a reason to buy or sell this market. Currently, and we've been talking about this if you've been watching our webinars, this is really a range trader's delight, what's going on here. We don't have any excessive swing highs, and as soon as we do, they fall back into our range. If you look at here, where have we been for the last few months? The bulk of the trading is in this range between 75, basically 76 even and 78 even. That's a $2 range. There's a lot of up and down that you see most of these days here. Bulls and bears alone would be getting slaughtered on these days. Range traders that sell into new highs and buy into new lows and look for the snap, they've been cleaning up for the past basically couple months on any given day, except for some extremes here where we had some trending. So we don't have a signal right now. Short term, it's a bull. I would key off of these levels here. If you are a bear, you do not want to be short below above 78.91. This would confirm higher move highs. And also, we would be looking to take out this area here, which is this long-term top from setback from the end of February. So 80 even would be a very good upside target if we get above the 78.91. A failure from 76.89 here, though, would have us trying to test support down to 75.95. Most likely you're going to see a bounce. The only way I could honestly tell you that you probably see a big sell-off in the Australian US dollar would be if you have a big sell-off in oil and gold. Until that happens, I think it's going to be neutral to higher. This is a mixed bag of goods here because oil helps this, gold helps this, but higher raising interest rates in the U.S. help to hold this at bay. So which one has a bigger factor? Well, interest rates are becoming more and more of a topic just because of what Janet Yellen mentioned last week about possibly raising rates, which is a new take on what the central bank will do, because right now it has been our understanding and we've been told solidly that they are not touching rates until 2023 because of the pandemic and all kinds of other stuff, but now they are changing their tune. How soon they forget, right? And also to fight inflation, folks, I'm sorry, you don't raise interest rates because that raises the cost of carry for commodities, which means that causes more inflation in the commodity markets, fueling the bull run already. Also, it means that credit will also get more expensive across the board, which means the cost of business, the cost of lending, et cetera, that goes up, that causes inflation. So we'll see what happens. Now, if they think that by raising interest rates, they're going to curb home buying or something like that when we have a short supply, I don't think that little bump is going to actually do anything except, like I said, cause more inflation across the board in other markets. So let's look at the New Zealand dollar, US dollar. This is looking very similar to the Australian dollar. It has the same forecast. What's my favorite currency from Doug Gamers Allen? My favorite currency to trade is the euro and the yen as far as with the US dollar cross. I do like the pound, but like I said earlier, if you were listening, it has violent moves in any given one day. So I look for extremes to find buy setups and sell setups. But I do love the pound because when it moves, you get a lot of bang for your buck. But you have to be aware of what kind of risk you're taking on with your pound. You have to really set your levels tight. But for the most part, my favorite currency to trade is the euro US dollar, the US dollar yen, and the US dollar Swiss. The U.S. dollar Canada I trade every once in a while, but not that often. Right, I wish I would have stayed in my short from months ago because who knew that oil was going to continue to maintain its posture and we would have such a negative take on the industry. So that is just, we're going to get to that currency next, and then you'll see if you're a bear of the U.S. dollar. Let me tell you something. The U.S. dollar could become a bull versus every currency out there unless we start producing oil and exporting oil to the degree that we were. There is no chance anytime soon that the U.S. dollar Canada will start to rally in a big way. If anything, any rally will be a rally to sell. The same thing here is with New Zealand dollar, U.S. dollar. As long as our oil policy stays the the same as it is. This is not quite as influenced by China as Australia is, but we're following the oil. So let's look at it this way. If we get a big surge in oil and a continued rally in gold, it's likely that we'll see a breach of 73.05 and then look for a challenge of this high back in the end of February. A failure from 71.35, however, would have us looking for a little bit more of a testing of support. I wouldn't say it's necessarily bearish in the long term. It would just be looking for a better place to buy. The slope of this trend right here is very mild. It's very easy to maintain by attrition. By the middle or end of this month, we're going to be coming into the support, raising the baseline, and maybe we will get a nice sell-off. But I would say right now, with oil bucking at new highs and gold making new highs, it is very likely that we will see a turnaround in the New Zealand dollar, US dollar over the next few days and see a challenge of this area. Now let's get to the US dollar Canada, since I gave you those little hints right there. US dollar Canada, key off of the low from last week. Any failure from here to $20.43 confirms definitely this grinding trend lower is going lower. I mean, just look, this goes back to last year. This just continues. It's not a violent trend, but it is just a sell rally forecast. Should we get above $22.05, we could still see a nice little correction. I mean, back all the way up to, let's use the 50% rule. We'll put it right here. Let's say that we don't take out this $20.43 low, and we get a rally above $22.05. $23.50 right here, which would be bucking up against this high here, and that's another reason to say that this is probably the extreme. We would have to take out this level to confirm a higher move high. That would really matter. Just because we take out this one, and let's say that this low holds and we take out this high. That's just a short-term higher move high after a higher move low coming off of this little area here. But that's in the short run. That doesn't mean that a higher move high over the next couple days wouldn't be the peak before this market falls apart again. So especially if you see oil continue to rally, especially above $66, odds are very, very good that we're going to see the market trading lower down here, probably down to $1.20, even $1.19.5 is in our targets to the downside. Do not try and catch a falling knife, folks. You're going to get stabbed. As long as oil definitely continues to buffer resistance, and if we get a breakout above 70, there's no way in my mind that I could see any reason for us to see the US dollar Canada bulls come into action here. So let's say that the US dollar becomes a bull versus many of the currencies, especially like the euro, one of the biggest strengths, continues with the Japanese yen and what have you. Unless we see a sell-off in oil, a significant one like below $60, I can't see this market maintaining any type of rally beyond this $23.50 area. So we'll see what happens. Obviously, anything can happen. You got to remember that this boggles my mind too, is that the political climate between Canada and the U.S. is actually strained. Now, Canada is one of our biggest allies, and usually we don't have any real animosity. Things get resolved very quickly with them. The fact that we do not have that action occurring now is mind-boggling to me, but that also tells me that it is very unlikely that you'll see U.S. dollar strength versus the Canada also anytime soon. So there's a lot of political hurdles that we have to get over, and also the trend, the commodity trend, is driving certain currencies. So here's something I want you to remember. Like today we've been talking about gold and oil and interest rates. Interest rates are always a function of every currency, no matter what. So for instance, with the US dollar, interest rates for the Fed, how that's dictated, that influences that currency. The ECB obviously contributes to the euro, and the Bank of England, the BOE, also contributes to the pound and what have you. So, and that's one variable. The reason we mention oil is that with certain currencies, those countries are oil producers. So where Canada and the UK, they produce oil, Strong oil is strong their currency against them and other currencies that don't produce oil. Like for instance, see how the US dollar Canada is going down here? Let's look at the Canada over the JPY. See this rally here? This is where you get this commodity trend to show you a trade. Remember, I always say the best indicator for the markets is the markets themselves. So let's just say, once again, you think that this, what is Teddy talking about with oil? Canada supplies oil to the rest of the world. Japan buys oil from the rest of the world. So that being said, with oil buffering new highs and continuing to rally, look at this. Canadian dollar continues to rally versus the Japanese yen. This is the oil trade. Now, there's an interest rate factor involved. There's geopolitical factors involved. There's all kinds of other issues. However, when you have such an underlying strong variable such as oil, Canada, like once again, Canada produces it. Japan buys it. Price of oil is going up. So the value of the Canadian dollar is stronger and the value of the Japanese yen is weaker. So hopefully that is pretty clear. It sounds very simple because it is very simple. I know a lot of people say, well, there's so much more to that, and there's so many other variables. Well, yes, there is, absolutely. But when you're trying to confirm trends, long-term direction, I'm not talking about an intraday, 15-minute, 20-minute, hourly trade, or even on a 1 to 2 day trade. But if you're looking for overall direction, where is the trend? Here we have here, forget the oil trade. Higher move high, higher move low, higher move high. This is lower here, but on a longer term basis, it's a higher move low. And also you could look at it, what is this? Lower move low. This is a corrective slide right here, showing that once it did this, after this lower move low, what did it not do? It didn't make another lower move high and a lower move low. It just continued and made a higher move high, confirming that this was just a correction, and then this is the continuation of the bull trend. Once again, higher move highs and higher move lows is a bull trend. A bull trend in oil supports a bull trend in Canada. So if you have the fundamental visual technical fact of higher move highs and higher move lows, then you have a fundamental component like oil, which that influences the value of the currency that also supports those trends. So these dynamics help you have your overall view and tell you when you have a trend trade or whether you have a counter trend trade. So like for instance here, this was a bullish engulfing line buy signal right here. So that right there is a high probable Japanese candlestick pattern, which you can learn to trade from the book, High Probable Japanese Candlestick Patterns. So when you take into account, once again, let's go back to our fundamentals. Oil's going higher, right? This market has its little sell-off right here. Well, this is when oil was going sideways and somewhat suppressed. Let's go look at the, actually we don't have to change this. Okay, so what's the date here? This is April 21st of 2021. This is crude oil. April, here we go. Here's April 21st, 2021. Over the next few days, oil had sold off after its basic consolidation phase here, and boom, started a rally. So here, since April 22nd, whatever, it's been rallying, and then we go back here. Here we have April, here's April 20th, 21st, 22nd. Canadian dollar has been rallying. Look at that. So once again, that helps to show you how you can use these other markets. And this is live. Like remember, if you use, like you notice I use Fibonacci here. I'm using trend analysis. I'm using other intermarket relationships. These are all live and as they happen. Many indicators, for the most part, are lagging indicators. So for instance, let's say that let's show you what I mean by this. This will be very visual and easy. Let's go and get, not this, let's go to, oops, no, put this, indicators. Let's do a basic stochastics on both of these charts. So here we go, stochastic. All right, so see this? We had this buy signal here. Now, however, because days have passed, you can see that this marks here with the stochastic crossover on that day. That's because we're already this far out. If you were at this day, you would still be underneath here. The cross wouldn't have occurred until really 2 days later. That's when it would visually be seen on this indicator. So you would already have missed out on the potential to buy in. Who knows where the market could be already at that point. Okay, so but there's a lag there. So now let's go back to, let's see, we're Canada JPY. Let's go to crude oil and do the same thing. Here are indicators. And come on. It's spinning. It's hurrying. Let's do this. Try this again. Sometimes you just gotta. Come on. Alright, why is this spinning here? Alright, well, we don't need to waste any time here. Alright, so anyhow, back to this indicator thing here. So Canada JPY, we have this, where we have the buy signal. Once again, this indicator here, it was already in the oversold category for a couple of days, and then it stays in the oversold category, but because of today, because we're looking at it so far in the past, this already shows the cross pretty much in line with this one here. Now let's go back to the US dollar Canada. US dollar Canada. Okay, so what happens here? We had the market cross right here. What happened? The market fell apart, kept going lower. It's still oversold. Here, the market crossed early, because we had this 2-day pop after all this, but this didn't show up. This doesn't show up until later. Now here we have this. We have a crossover here, still in the oversold territory, which has us bobbling here. Now, what would we do in this situation? This is where most likely, because it's dragging this indicator, you're like, well, it's oversold. When is this indicator going to give us a valid buy signal? Well, that's where the trend analysis comes in. That's where it comes in where you use the other things like the Japanese Canada, like Canada JPY, and also the crude oil to confirm the strength of the Canadian dollar. So if you find strength in the one underlying major currency, then you look to fade the reactions versus the other currencies. So that's why I like to use just the markets as a whole before using these indicators here, just because they're lagging. See, like right now, because of where the market is, it's showing a crossover, okay, on the daily. The day's not over yet. Now tomorrow we could be pretty much a neutral trade, and then it's going to skew out a little bit. So you don't have an actual live indicator that you can trust, because this number is skewed because it doesn't really give you a confirmation of crossover or non-crossover until a few more sessions have occurred. So that's why it's always in the lag. Okay? So we've looked at the US dollar Canada. We looked at all the major crosses. Let's see, do we have any questions? YouTube, you guys, nice comments, but no questions. Twitch, thank you guys for your questions. Doesn't look like we have any other ones. So let's go back to the Euro US dollar. So once again, this market very quiet today, hovering below these highs. Perhaps we will see a breakout. And here's another reason too, is like, see, look at this. With this market here, we have no idea what to do with this kind of an indicator here. See how it's chopping around here? What do you do with this? And see this? It was overbought from here. It crossed, and what happened? The market kept going higher, kept going higher. The market still was crossed over, looking it should be going down, and then what happens? It explodes to the upside. Then you get a little buy signal. Then here, boom, you finally get a sell signal again. You get a couple days, but it's just a corrective move. Now we're choppy. Now the one thing that we do have here is, and this is interesting, this is where indicators, you can use them in a really good way. Let's get our drawing tool here. Okay, so brush. All right, so you see this? We have high, high, lower move high, lower move high, lower move high. Now let's go into this point here. Here's our high right here. Here is our high right here. This right here is higher, oops, than this high on this indicator. And then we have, like I said, this high here. And then we have this high right here. So we have what is called divergence. We have okay. So if you look at, we don't need this. Get rid of that. Okay. So on this date here, this high was occurred, and on this date, this high occurred. You have this crossover here, and then you have this crossover here. This one is high. This one is lower. This is high. This is a higher move high. So this is actually setting us up for a potential turn. So what does this tell me? That this right here could be a shoulder. This could be a head. And if we don't make a higher move high at $1.2184 here, especially today or over the next couple days, then that sets us up for a sideways to lower trade. And if we do that and take out $1.2051, that would confirm a short-term head and shoulders, which is signaled ahead of time because of this divergence. So you can use, and this is where I like indicators, so it's not that I never use these, but this is where you use them to give you a signal. So on any given one crossover, would I use it? Absolutely not. However, when you have a higher move high and then a higher followed by a higher move high, and then you have in your, especially when you have an indicator that's been dragging oversold or overbought, when you have it peak and crossover, and then have a peak and crossover in lower or higher, depending on whether you're, so in this case, this is making higher move highs. This is where you have a lower move high in the indicator in a rally. That's divergence. The opposite would be it to the downside, where you'd have a lower move low and then a lower move low again in the market. You would have a bottom, which would be down here, okay? And then you would also have a lower, in that case, a higher move low when you have a lower move low in the markets, conversely. So divergence is something that also helps you out a lot in your trading if it help generate signals. So right now for the Euro US dollar, this goes along with our neutral to lower forecast. Remember, as we're looking for an oil breakout, that's negative the Euro US dollar. The gold rally is not helping the Euro US dollar as far as strength right now. And then with the looming potential of raising interest rates for the US dollar, that is bearish the Euro US dollar. Now we have divergence of stochastics versus higher move highs with the Euro US dollar. So right now, like I said at the beginning of this webinar, we have a very good low risk sell potential where you can sell right now versus the high from a few sessions ago. If we take out $1.2184, all bets are off, so that's good. So this gives you another reason to be a bull then, should we violate these things, because if we take out this higher move high, well then this is no longer a head and shoulders formation situation, and this divergence here would have mean that it ended already. So now, interestingly enough, if you look down here, and this is where I say that markets are lagging, let's look at this one here, and let's change the color to blue. It doesn't stick out enough. Okay, so see this little purple that doesn't go. Let's go with red. All right, so we have this red line here off of this low right here, and then we're going to take this low right here. Let's make this a little bit bigger of a chart so you can see this. So now we're looking at this low right here and this low right here. And let's show you how this is why another reason why lagging indicators don't work most of the time and you have to wait for or use divergence instead. So let's look at this. Okay. So this market bottomed on May 5th. It didn't cross here until May 6th, which was really probably May 7th or 8th. So you would still be looking for, and this is in the middle of the zone, you would still be looking for this market correction according to stochastics to trend lower when we had this bullish engulfing line. Then we also had the same situation here where the market found support, literally, and then starts to rally, but doesn't cross for until really, well, it actually occurred today, because yesterday, if you had looked at it yesterday, this would be not crossing yet. So this is in a lag as well. So once again, that's why you don't want to, and plus, since it's in this middle zone here, not a good place to use stochastic crossovers for a buy and sell signal. But it does show you, once again, where it highlights the point that I was getting at, is that they are lagging indicators, and they do have value, especially in times of divergence. And we'll see what happens over the next couple days. I'll make sure to highlight that in our video as well over the next couple days, since we talked about this. So, and I have to say, if you read the book High Probable Japanese Candlestick Patterns, we have a whole section on divergence and showing examples of how to use that. Divergence is one of my favorite tools for reinforcing signals. So for instance, when you have divergence, whether it's from the charts themselves, from the market, or you have divergence because of other indicators, they're very, very useful tools. So let's see, we have no questions here on these things. We have no questions on YouTube or Twitch. So I want to thank all you guys. If you want to, please leave some comments in the comment section on our video. Please do so on our YouTube video, and we will get back to you. If you're on Twitch, it's better if we'll check our chat box. Let's see, how was your day so far? My day so far is pretty good, the gamer. I finished up all my morning stuff, and I'm getting ready to go hit golf balls in about another hour and a half. I just have to get gas and stop at the bank, and then do one little errand at the post office, and then I will be going and hitting some golf balls, and maybe even playing 9 holes today. It depends. I'm in Chicago, and it's looking to set up a little bit of rainy weather. So, also, for those of you that are paying attention right now, don't forget, on our YouTube channel, whether you subscribe or not, check it out. We have playlists. We have options lessons that are for eoption.com that are used for equities and ETFs and stuff, but they're also applicable to futures traders and binary options traders for who trade the currency markets. We are going to be doing more and more of a crossover with those things to integrate and give you more potential. One thing I've been trading markets since 1990, been in the business since 1989, and studying them since I was even younger than that. But the skills that I have learned the most over the years is that being able to correlate other markets, even though you focus on one, like the question we had here was, what's your favorite market to trade? Like I typically focus on the euro, the yen, and the Swiss. But I trade anything that's moving, and anything that has a buy and sell pattern that fits my parameters based off of what capital I have laid out at any given time will dictate whether or not I jump into them. So I trade corn, I trade wheat, I trade S&Ps, I trade bonds. Predominantly is the Forex market that I focus on, just because of the transparency and the ability to trade 24 hours. So now let's get at our little crypto break here, because I mentioned at the beginning we would mention Bitcoin. So as far as the cryptos are concerned, which now they are starting to have some life, we can actually get some sort of longevity on them. Let's go to this screen better. This will be better. XBTUSD. So we're going to take a look at this. Let's get rid of this little indicator here. All right, so what's going on in the crypto world? Well, obviously a harsh sell-off. We found out that Bitcoin now is very news reactionary. We're waiting for a signal. We have lower move lows after lower move highs. Short term, obviously this is a bear. Medium term, it's neutral to bearish. This is unlike the other currency markets and futures markets and equity markets. Has well, it's a house of cards in many ways, but it is there. So as far as any signals, we don't have any right now. We did have some successful signals back here, and back here. This was our last buy signal right here, this bullish engulfing line for the Bitcoin currency or crypto asset rather. I don't like calling it a currency because it really isn't. But since then, we've had this fall off because of the news. What I would like you to take a look at is, if you are a Bitcoin watcher, is to watch Ethereum, oops, ETHUSD, and Monero. So this is very interesting here. We have a sell signal right here, big bearish engulfing line. So where does this bring us down to? So we'll take this, we'll go back to this low here, and we'll go to our 50% level. So today we tagged the 50% level for Ethereum. Does that mean that we're not going to go lower? Not at all. It doesn't mean that we can't go lower, but it doesn't mean that we will either. So right now we're finding good support here. You made this higher move low, lower move high, lower move low. This confirms a short-term bearish trend, a medium-term neutral trend. Now, markets tend to go out like they come in. So if this is the high right here, we had a nice, it was a fairly steep trend, but not that steep. So for us to, now we've touched in this area, for us to bobble around this little zone and find support before we either go back to higher move highs or maintain a bearish trend. Anything's possible, but I would say you're probably going to find support in this area and then see at least a digestive period where we could get back up to this 37.5 up to $4,000 area, chop around and base. Remember, this market is up huge over the past couple months. Unlike Bitcoin, Ethereum is in lag, and it's not as old, and it's been around, but it's doesn't have quite the market cap as does Bitcoin, nor should it. But it is starting to show more validity as a cryptocurrency. So I would key off of, for Bitcoin strength and weakness, what's going on with Ethereum. Since this is starting to look like it might find support, let's go back to BTC. This could be something that we find to help with the Bitcoin trade. Now, there is a big rotation now. The irony is that as you have cryptocurrencies maturing, people are selling Bitcoin and they're buying Ethereum, they're buying Monero, they're buying Dogecoin. Dogecoin is something I am very leery of, just because it's a house of cards in a lot of ways. Does it have valid technology? Yeah, I guess to some degree, but it has some limitations that it has an expiration value. So the question is you don't want to be caught long that when the expiration momentum falls into place, meaning Dogecoin could go to $10,000, but it has potential no matter what, even if it goes to 10,000, to go back to zero literally within minutes or even hours. So whereas these other cryptos, the same could happen, but the likelihood of them happening is not as extreme. So the fact that's just an accident waiting to happen. So we look at Monero making newer move lows here. We did not have a sell signal like we did in Ethereum, but we did make this high here. We made a little pullback here, higher move low, lower move high, then lower move low, lower move high, lower move low. You get the idea. So we have a short-term trend lower for Monero. As far as where's the base, I would say we have this area here. We've already come through our support, so we should be finding support, but that doesn't seem to be the longer term catch. But see, here's the 50% and here's the 0.618. So I think that just like we have Ethereum, we're coming into a buy zone here, or at least a neutral zone where we should start to set a holding pattern, maybe even get, now remember, the trend is a bullish longer term for all of these cryptos. So right now we are in a corrective wave lower right now. Okay, so corrective wave means that, are we bearish? Only in the short run. Are we bearish long term? Absolutely not. We don't have any long-term confirmation that XMR, Monero or Bitcoin or Ethereum are going lower in the long term. However, markets don't travel in straight lines. It is absolutely normal for them to correct, whether it's a bearish correction or in a bull market, or a bullish correction in a bear market. This is just what happens. Okay. So, as far as buying, if you're already in Monero and you're looking to take profits, well, I think that you probably, if you didn't do so already, there's no real reason to right now. Don't see it really treading much lower. Is it going to, or could it? Absolutely. But odds are somewhere we are now forming a baseline. I would be quick to watch once again. Like here, let's go back to BTC. So this one is extreme and really prodding lows, okay? So when we look at the value of Ethereum and Monero, they're trending lower because Bitcoin is almost like the dollar index for the currency, for the cryptocurrencies. Not that it's not an index, but where Bitcoin goes, many of the other currencies, cryptocurrencies, tend to be influenced by that, especially when you have major moves. Now, think about the extremes too. Like Bitcoin just a few weeks ago was trading up above 65,000 or above 64,000, excuse me. Now we're here at 43,000. So that's a big $20,000 sell-off, and we have more than a 20% correction already. That sets us up for a chance to get a bounce. Now right now it's all sell, sell, sell. Intraday, hourly, daily, it's a bear. But then we go to ETH USD, where we had our sell signal. We're coming into our target range. This is a corrective move, just like what's going on in Bitcoin and Monero. This is a little bit cleaner than what's going on in Bitcoin. Obviously, the valuation of Bitcoin is more than 10 times higher. The influence and impact of what's going on in cryptocurrency in the news is much more influential in those markets, obviously still having an impact on Ethereum. What do you think about VeChain? VeChain, I've been starting to do research on and look into. I think in the short run, this is for James, I do like VeChain in the short run. Long term, I don't know yet. I'm just not being wishy-washy with you here. It's just a matter of, I think that in the short run, it has a lot of interest. I think that it's way too, it's over marketed in the short run, meaning that you're having a lot of bailout money going into that just to throw it at, like, it's just the new Bitcoin, if you will. Everyone's that didn't get Bitcoin when it was below $1 and in the hundreds of dollars or even in the low thousands of dollars is looking for the next Bitcoin. So James, is VeChain going to be the next Bitcoin? It may. I don't believe that it is. I think that it has some valid technology. However, I think that the fact that its market cap has exploded so fast, which people are saying, well, that's just the new world and that's how cryptos work. No, it's not. That's not how markets work. What we have right now is a lot of people who, most of your crypto investors and traders are not, it's not necessarily that they're young. There's crypto traders that are older than me. I know people that, for instance, the founding partners of Athena Bitcoin, which is one of the largest Bitcoin ATM operations in the United States and is also global. I deal with them. I have for years. I deal with other mainstream people like who are involved in the creation of Coinbase and a couple of the other exchanges, because they have been working with people from the futures exchanges for the past few years. That's why you have Bitcoin futures contracts. Now you have mini Bitcoin futures contracts. So the validity of VeChain is that like all the cryptocurrencies are technically pink sheet penny stocks, if you look at it that, if you want to look at it in a very kindergarten level. However, they do not have any real equity assets, so they're not stocks. So, but as far as the trader that goes into investing into pink sheets and penny stocks, you get all the get-rich-quickers, and most of those companies are theories. Some of them are real companies. There is nothing wrong with them. There is nothing wrong with investing in them. Over time, you have a potential to at least not lose money, make a little money, sometimes even make a fortune. But you have a lot of, and this is what I want you to be clear on, and think about this in the future of cryptocurrencies that are issued. For instance, I could today form a company in the state of Illinois, or incorporate wherever. It doesn't cost that much money. It costs under a couple grand with a good attorney. And you set up a bank account for $1,000. Boom, you have a company. Then, as far as listing on the over-the-counter markets to sell stock to raise capital, you can go and do it that day. It doesn't mean that you have any assets. You may have an idea or a supposed technology or patent or whatever, but you don't have a business. You just have an idea that is maybe ahead of its time or with the times, and people want to throw money at it. And that's where you have to be careful, because when GM, for instance, offers a new stock issuance or a bond issuance, well, they're an established company. They have hard assets, and you have something to go after. When you, if, for instance, open up a pink sheet company and it's just a theory and whatever, you can go out and have a bunch of luncheons and breakfasts and bring people in to say, hey, invest with us and set up this and get in on the beginning, and you'll be part of the IPO, or you're in at such a great low price and whatever. And then we're starting a marketing campaign about this and that for our business, and we're expecting, you know how the story goes. Everything is all positive and roses. The thing is that's how scams happen. There are thousands of companies over the decades that have come and gone in the pink sheets. Some of them still exist, and every once in a while, you used to send them out in mailers. A lot of people who have brokerage accounts would get these, and they're not from real companies, they're from pink sheet companies, and it's just because you're on a mailing list because you happen to have a brokerage account that these scammers will send you all kinds of, promotions about their stock and their company, saying, oh, it's got a contract with this company coming up, we just signed a deal with this. And even if they sign contract deals with other companies, some of those companies are not necessarily fictitious, but they're scams themselves. So, and the contracts don't mean anything. It doesn't. If you say that you have a contract with a company that's going to purchase your products, well, you have to produce those products first to truly sell them. And a lot of those contracts, when they say they're going to buy X amount of inventory or services from these new companies, there's a clause in there. They may never purchase a thing. And it depends on demand and volume. They may not be locked into them, so they're synthetic. So they put out news releases, and then you will get people to go and buy them. Astute investors, people who do their due diligence, and people who have studied the markets know that these things exist. Does that mean that every penny stock is a scam? Absolutely not. The majority of them are legitimate people and operations doing what they need to do to build a business. But the cryptocurrency space is the same thing. There's a lot of technology-based things that it's not just keeping up with the Joneses and trying to build a better mousetrap. It's trying to institute technologies that the broad market may accept as a viable thing, but it doesn't mean that they're going to buy it. So think of it like this. You can use Amazon Web Services for all kinds of things. There's all kinds of companies that try and compete with the majors in the technology space. They come and go all the time. Or they say we have a new way of doing it and providing it that's cheaper and what have you. They come and go all the time. And that's where something like VeChain, and I know I'm not rambling here. I want to be clear for you guys that are listening. When it comes to these cryptos, be nimble, be smart, and especially if you're looking to, throw a couple, never use, just like when it comes to trading, unless you have a lot of capital in your experience, don't rely on that as a living. Make sure you have a job or a source of income, and then you use capital that you're willing to lose or have the ability to lose, and it doesn't impact your life. So if you have throwaway money, or you have money that's invested, you're saying, hey, I got 10 grand, 50 grand, whatever it is, and it doesn't hurt your life or your future, because you want to first secure yourself with things so your retirement's set up and you have investments that are growing, that are stable, and then you get into things like cryptocurrencies and or even trading futures, or even trading currencies, Forex. You don't just go jumping into doing it, And you definitely don't allocate all of your capital into those markets. But once again, if you have money to allocate, my suggestion is, like with VeChain or even Dogecoin or any of these cryptocurrencies, when you have your initial investment, and once you start making money and you're up money, especially like if you're up 2, 3, 4, 5, 800%, like some of these things are in a very short time, A fool and their money is easily parted. So let's say that it is a scam. Well, if you didn't get out and all of a sudden it goes to zero, you're a fool because you had the opportunity to take profit. Pigs get fat, hogs get slaughtered. Don't be a hog. If you make your money back, let's say you have an 800% return, take back your initial money plus a little profit and then let it ride. Whatever, if you want to trade these markets, I would use caution with where you use them. The CME now offers Bitcoin futures and micro Bitcoin, mini Bitcoin futures. There are risks to trading futures, just like there is trading cryptocurrencies. Be aware of those things. As far as being long and short Bitcoin and stuff like that, you have regulatory strengths by using the CME futures contracts. However, they're not open during the weekends, so you have a weekend risk. Coinbase, obviously, and other places are great places to buy and sell. Remember, there's an edge that you give up. Just use your head when you're investing in these different markets, especially when you get into these coins, altcoins and stuff. So we are now discussing more and more the cryptocurrency markets. We are for and against many things in it, just like in any market. So we are not down on cryptos. We are also not on the crypto bandwagon that this is totally the future. Do I think it's going to end badly or is it going to end well? Well, it's anybody's guess. But I do believe that when it comes to the cryptos, just like the pink sheets, you will see the legitimate technologies that are viable and that can be truly not just perceived but used as a store of value, then those are the ones that are going to be the future. They're not going away. I think that no matter what, to some degree, cryptocurrencies is not just the future. It is here and it is not going away. The problem is when the power goes out. The problem is when there's all kinds of, since it's so technology related and based, there's a lot of flaws. They say it's all unhackable. Nothing is unhackable. It's not hackable now. And that's coming from somebody who's been programming since I was a kid in the late 70s. So never tell someone that's programmed. And when I was a kid, not an adult, I used to hack games. So there's always a back door. It just hasn't been done yet with the cryptos. So, and once again, the strong ones, the viable technology, Ripple has a very viable technology. Is Ripple going away? Probably not. That might be one that in the long run does have a very good sustainable future. There's a good place to put your money. VeChain, Dogecoin, stuff like that, especially Dogecoin. I know it's gotten all the news and what have you, and once it's on Saturday Night Live and everything else, it may be you're probably too late, and if you're not, it still has a lot of holes, but once again, just like in any trade, any investment, if you're investing in these things, look for value, look for something that you like and that you use, So if you use any of these coins, which that's the biggest problem I have with a lot of the, just because there's so many new coins, there's new coins coming out every day, is that it's like now everyone's just trying to come up with their own currency. These are not currencies. These are not means. Just because you use them as a means of exchange, it doesn't mean that they are a true means of exchange, because you cannot just use these things everywhere. And also the fact that any true means of exchange has stability. A dollar, even though it fluctuates, it does not remotely fluctuate like any of these things. On any given day, when you go to the supermarket, your dollar has about the same buying power. Now, obviously, we've had rampant inflation over the past 3 months. A dollar definitely doesn't buy what it did 3 months ago. But think about this. That took 3 months to occur for prices to go up for everything. With Bitcoin, for instance, you have a fluctuation of $20,000 in just the past couple weeks. If the dollar fluctuated like that at any given point, you would be paying, the price of a house for a loaf of bread possibly on any given one day, and then whoever sold that to you would be like, oh great, we got all this money, and then all of a sudden it collapses down to the price of a wheelbarrow, and then all of a sudden they don't have the profits they thought they did, and now they can't pay their bills because they have less money than they needed from the sale of whatever product or service that they had given in return. So these are the holes, which are, like I said, not things to worry about. All right, thanks for your assessment. Appreciate that, James. So we've covered all kinds of stuff. We've been on for an hour and a half. We really appreciate all your questions and interest and your likes on YouTube and on Twitch. And remember to check us out every day at forex-trading-unlocked.com. We just want to remind you, for some of those buy and sell signals, if you want to learn how to trade them, you can check out our book. Go to our website, forex-trading-unlocked.com. In fact, let me give you a real quick look here. If you go back to our website, and you go to the nav bar, product, courses, and services, we go down to this bottom part that says, oops, there we go, ad removal details. Okay, why is it giving us an ad? Okay, there we go. So high probable Japanese candlestick patterns. We have a page here. We have a little video that gives you a little information about the book. But if you keep toggling down, you can see the cover of the book. You can buy, share, or preview. You preview it, and it'll give you some of information on what's written in the book. And then it's up to you. It's your choice on what you choose to do with it. So once again, please check out the book on Amazon, and also like, subscribe, and follow us on Twitch and YouTube. Also, you will be notified when we have live videos coming up by doing so. And also, if you leave comments, especially on YouTube where it stays up much longer, we will get to your comments, we will answer your questions, and we also will possibly incorporate them into our next videos. So I'm Teddy Keckstedt. I want to thank all of you very much for hanging out with me today, and we'll be back looking for those signals. Remember, we have that budding continuation signal forming in one of the FX markets. We have a couple buy and sell signals that are already coming to fruition. We'll see how they react, and lots of good things coming ahead with oil numbers on Wednesday and a bunch of other things. Lots of action and volatility. Things are fun. I know things are crazy in a pandemic world, and whatever your take is on it, but the good thing is the markets have been swaying for a year and a half, and I haven't had this much fun trading since the late 90s, because this volatility is wonderful and fun. Lots of opportunity. Just remember to always weigh your risk, have your trading plan set, your target set, know what your risk is, and don't treat markets like it's a gamble. Gambling is gambling. Trading is a business. Take care. Have a good day. And